Hi, Chris Peterson here with Ryan. Just to discuss interest rate management today. New Zealanders tend to have a bit of a fixation with interest rates and tend to always try and go for the lowest rate. In a lot of cases, this isn't the most important thing. This tends to often end up with maybe creating the wrong activity or the wrong behaviour, as often maybe that particular rate may not be the right rate. Also, the way you manage overall interest rates is important.
What we've seen in the current credit market, as people's assets tend to rise, they feel a lot richer on paper, and especially when credit is easier to get, we find a lot of people increase their spending on things that they perhaps wouldn't have in more conservative times. What that means is that a lot of people we find are on really high rates in terms of having finance with different kinds of lenders, usually unsecured and usually for the purposes of things like vehicles, holidays, etc. There are other ways of consolidating this as your assets have gone up by using things like property, like vehicles and other forms of assets that can hopefully get you at a reduced rate on what you've got. In terms of how you structure those repayments can ensure that over the course of however long you plan to repay that debt, you actually end up paying a lot less interest overall.
Also, using revolving credits can be quite important. I see in my meetings with new clients in particular a huge amount of clients who tend to be quite good with money, and then they might be sitting on considerable amounts of savings on one side, but they're still holding mortgage debt on the other side. And so using a client this week as an example who was in a very good position, he had significant cash in the bank earning about 2.5%, but he also had mortgage debt where he was paying about 5% with the same bank. So what we do in this client situation is actually recommend turning that mortgage into a revolving credit facility. He then puts the cash across, dumps it in, so he's still got access to it because people often want their rainy day money, but he suddenly gets the benefit of that 2.5% differential rather than the bank. There's also other things with revolving credits which can be beneficial, but you really only want to look at these if you're good with money.
Understanding your behaviours in terms of how you manage your cash can be quite important in receiving the benefits of these. If you are able to allocate your cash appropriately, there are often options with revolving credits where you can dump your cash in, and for the balance of the time frame in which you get paid, for example, if you're paid monthly, you can spend your living expenses out of something like a credit card. During that interest-free period, the balance on your mortgage and your revolving credit is often a lot less than what it would be had you not allocated your cash there. Because interest is calculated daily and charged monthly, the ability to have that reduced balance really can reduce the total interest you pay over a 30-year mortgage. Also, just probably something else commenting on revolving credits is even things like insurance. Tend to see quite a few clients who maybe with income protection or mortgage repayment might have their, the way that both of those tend to work is you have wait periods, and the longer your wait period before you start receiving your benefit, the cheaper the premiums become. So a lot of clients may sit there and end up in a situation they've got a short wait period, which pushes their premiums up. We've had cases where we'll sit there and make sure they've got access to revolving credit cash at all times, which means they can push the wait period out and thus save on insurance premiums. So we'll try with the advice that we give here to try and create a real holistic advice which does include the mortgage and insurance advice at the same time. I suppose it goes back to what I was saying earlier, is it's not always just about the rate. The way that you're structuring your mortgages for your overall setup is important.